Okay, to get this video started, I would first like to introduce myself and talk a little bit about what this channel is, what we do, and what it can do for you. So my name is David. I've been trading for about 4 years now, and I'm known formally within the Webull community as Bull on Parade. This channel was created to help bring experience to beginner traders and help bring wealths of knowledge to people like yourself, perhaps, who have been trading for a number of years and are just looking for some sort of supplemental addition to your trading experience. So what we intend to do is provide in-depth research on our daily and weekly watch lists, as well as broader market updates and Trader 101 tutorials, which can help bring a beginner trader all the way through the intermediate stages and bring them up to a level of experience which can financially change their investment strategies, as well as give them that leverage that they may be looking for to become a real participant in the open market. So today we have 9 stocks on our watch list. Many of them are volatility stocks, as well as inverse or ETF funds. Some of them we also have potential rebound plays, as well as oil and gas industry stocks. So first on the list is INDO. This was the top gainer from Friday's session, all the way from pre-market to after hours. This stock literally exploded. It was on my radar before Friday, but I was in class until about early afternoon Friday, where I took a position at about $22 per share and exited at about $28 per share. So my first question was, will it hold? I didn't think that it could going into after hours, but then it really consolidated and started to uptrend right before the final minute of the after hours session on Friday. And with intense conflicts going on in the Ukraine region, as well as the possibilities and likelihood that Western markets may sanction Russian oil, there's a lot of prospect to some of these companies where in the last few years they have really taken a downturn due to the prospects of electric vehicles and renewable energy taking their place. So Friday's trading session, we saw about 66 million volume, and to bring that into perspective, the free float on INDO is only 1.57 million. So we circulated the shares at least 40 times throughout that single trading day. And so much uncertainty, people are kind of looking for the safer bets. And contrary to the fact that you may think this is insanely high, with such a small float, such a major retail demand, this really could go far beyond its pre-market highs of $59.32. So it's hard to tell with Friday's chart alone when would have been a good time to buy, but especially with the activity we're seeing during pre-market, I personally wouldn't touch this until I saw some sort of major correction to the downside and continuous inflow to see some sort of a short-term rebound play. This is not something that I would consider holding long-term, and I would even be sketchy shorting this stock, to be honest with you. So taking a closer look at the intraday to right before after hours on Friday, this is a very aggressively bullish chart. I wouldn't put it past the possibility of seeing beyond even $70 for this stock. But like I said, since it's such a risky trade, I would definitely approach this with caution. And if you're a beginner trader, I wouldn't trade this. However, there is an insane amount of potential here. So if you're a knowledgeable trader who knows how to approach these sort of risk-on bets, this could be a sizable trade if done right. Next on the list is MXC. This is a very similar play to the INDO play. The only difference is there's close to half the amount of shares that are in the free float for MXC, which makes this a much more volatile play. Friday's session saw rotation of about 7.5 times its available share float, which was somewhere just above 7 billion shares circulated on Friday. This, as I mentioned, is extremely similar to the INDO play, being that the last few years it has kind of taken a downturn with the idea that renewable energy may take its place in the next 5 to 10 years. So this hasn't gone quite as high as INDO yet in terms of percentage gains. In the current pre-market session today, we are trading around $35, up somewhere around 40% from Friday's close, mind you. So with this increasing hype behind all of what's going on, these two stocks, as well as a few others, I will post something in the comments talking about IMPP, for example, USWS. There's quite a few energy tickers that are currently really running, and they have quite a lot of hype behind them. And with red markets and so many issues going on, scaring investors, it's easy to make these things just continuously run beyond belief. With that being said, same goes for MXC. Unless I see something extremely promising, like some overreacted sell-off all of a sudden, maybe like 20% down or something like that, maybe a halt or something, I will look to do a very short-term bounce play. But we need some more solid evidence that the oil crisis is going to be something that's going to make these things go up and stay up long-term. Because considering the fact that Russian oil imports in the United States make up only 2% of our oil use, I'm really interested in finding out how much Europe is using their oil. So there could very well easily be some particular companies to benefit the most out of all of this. And perhaps in a future video we'll cover them, but for now we'll move forward with our list. This may be by far my favorite stock to trade with all of this going on. If you're not sure which energy company to buy or don't have enough time to do research on all of them, the ETF GUSH is a major game changer for not knowing these kind of things. It has definitely been ripping upward since about mid last month and hasn't really stopped since if you look at the overall trend. So we're up roughly about 22% in the last trading week alone, and oil is continuously surging and probably is going to continuously do so until the world decides what to do with Russia and the Ukraine situation. So it doesn't really matter if oil goes up and stays up, goes down and stays down. It really doesn't matter. The point of these ETF funds from a trader's perspective should be viewed solely as when it goes up, buy Gush, when it goes down, buy Drip. That's fundamentally how they will work if you don't know enough about individual companies. Sometimes it's easier to just know if oil is trending up, obviously because of reasons as mentioned before. Gush is definitely a good hedge to continuously see gains against market conditions like what we're seeing today. And then inversely, Drip is the downside for oil. So if you're interested in seeing what happens after this crisis comes to an end, hopefully it comes to a peaceful end, then oil will probably see a downtrend as EV and renewable energy starts getting hyped up again, but that's a whole nother story. So right now we're up to about 155 pre-market, over 145.8 last after hour session on Friday, which is pretty nice, but I consider this will most likely go up even higher, so I will probably add to my position if it stays below 150 before the market opens. I don't see that happening, so maybe I'll adjust my targets beyond that point, but I will be looking to sell out sometime toward later this week, or unless some sort of big news breaks that will relieve these surging gas prices and things like that. I'm hoping we could see something around 175 by the end of this week, so calls could be pretty nice for this. But like I said, trade at your own discretion. This is only my opinion, and hopefully it's something that you can use to compare and contrast on your own opinion. All right, so So moving on, looking at Gush a little bit closer, we see that it's aggressively climbing and met heavy resistance in the after hours session on Friday at around 145, 146. That is where I took a position. And as I mentioned, I do plan to hold towards closer to the end of this week. I'm looking for an exit somewhere around 170, 175, and it could go much higher than that far sooner, but that's just my more conservative goal considering the current conditions going on. All right, next up we have VIXY. VIXY is a volatility index stock. This, I think, is going to continuously follow the moving average quite aggressively, at least over the next couple of weeks. There are many different factors coming into play that are going to continuously send this skyrocketing. I did get it after hours on Friday at around $20 per share, maybe somewhere around $20.10 or something like that. This is another one that I'll be continuously holding throughout the week. I think we could see somewhere around $26 by Friday. I will watch it very closely, but I don't think that this has too much risk to the downside, at least as long as we see so much uncertainty. But with many other inverse funds and volatility index stocks as well, it's very important that if you're going to trade or hold anything like this, that you also pay close attention to the news, because sometimes very sudden dramatic news can cause very sudden dramatic changes in assets like this. And next we have SQQQ. SQQQ is an inverse ETF fund which shorts the NASDAQ. It has been continuously uptrending aggressively along the MA for the last 2 weeks. As long as the conditions are in place, which are keeping VIXY and Gush and other ETFs and inverse funds moving to the upside, whether our market stagnates or not, whether it runs up 1,000 points and then down 1,000 points the next day, these are some good assets to be paying attention to, because with so much going on and so many issues which are very far from being resolved, SQQQ, VIXY, definitely good short-term bets when we're in a uncertain or bearish market. And next we have Grab, which went down 50% last week after posting its Q4 2021 report, where they declared a loss of $1.1 billion. This was largely due to the fact that this company is aggressively spending in growth and investing for long-term growth, as well as eliminating its operational costs and trying to lower its debt ceiling. So in the pre-market session, currently we're sitting at about $3.30 per share, which is considerably low when you factor in this loss was actually caused because this company is investing in growth. You could chop it up a little bit, to the fact that maybe this company isn't making as much as people thought they should be making. But nonetheless, I think that a 50% loss when a company is investing so aggressively in growth is probably something that you should consider when thinking about the possibility of a reversal or something that may be a long-term play. And next we have MULN, which last week had a massive run up to around $2 from about 50 cents before dumping almost entirely that same amount. Something interesting about this company is the fact that there's been many allegations of fraud in the past, but there's also been pretty ludicrous claims by the CEOs of this company. Something that caused the rally this time is its new class electric vehicle that it plans to start manufacturing in the near future. Some are speculating it could start as early as 2023, but the company claims it's most likely going to start around 2025, 2026. Something that I also did find interesting about this company is its battery technology and the fact that they claim that they could theoretically extend the current mid-class electric vehicle mileage by about double. This is something that I think Elon might be looking into, as this could be a massive weapon to Tesla's arsenal, where they could use this technology to update their older versions and start implementing it in their newer class vehicles as well. So I'm still looking into the authenticity of this kind of claim, as it's still pretty new to me and I haven't had quite enough time to look into it. But this did wind up on my radar last week. I traded them right after this big dump, I traded them for the bounce and then sold out somewhere half between that recovery that you see. Now it is down to the low 70s right now in the pre-market. I did buy some more after hours on Friday around 77 cents. But I also did expect that this wouldn't be a big winner on Monday, but it just possibly could be a long-term recovery or could very well be a long-term play if they can materialize on these claims. And now we have the YouTube of the Middle East, which is ANGH. I like to call it the YouTube of the Middle East because this could be a company which winds up dominating the Indian markets and rivaling companies like YouTube, possibly even companies like Spotify, maybe even Pandora. This is a very diverse media company which has an array of services for the user. It's very user friendly and it's very popular in its area. So with that being said, um, the low float of this company definitely coincides with these massive spikes that you see. Any slight increase of volume just seems to send this running constantly. I've traded this at least a few times since its post-merger and wasn't disappointed with it once. However, with it having such a low float, if there is no news going and there is no reason to keep this stock moving one direction or another, sometimes the volume can send it running one day and then the following day or perhaps even later that evening it comes falling straight back down. So as with any low float stock, definitely trade with caution and definitely pay attention when you're holding a position. So lastly we have NCNA. This is a biopharma company which last week announced that its phase 3 biliary tract cancer was going to be halted. This is something that a lot of investors saw as significant, as many believe that this is kind of like a ride or die situation for this company. I personally don't think that this company was hinging solely on the completion of this trial. I think that it's definitely going to have some interesting details released in its upcoming investor conferences in the near future, and I will watch price action from now leading up to then to see if we can see any sort of consolidation down here, because if it can consolidate down here and we can be convinced that we are in the midst of a possible reversal, then should they announce any good news in their upcoming conferences, we definitely could see some major upside potential here, because this is, or at least was, a fairly sizable and solid company before last week. Alright, so that's it for the first video. Subscribe to our channel if you like what you saw and you would like to see more. Next time we're going to be covering trading strategies, how to read charts, and order types. This is going to be the beginning of our Trading 101 tutorial series, which is going to be more geared towards beginning and intermediate stage traders. So if you are an avid and experienced trader, this might not be for you. We will, however, post later on in this week another in-depth video on one of our watch lists, as well as a broader market update. And if there is something in this video that you would perhaps like to see covered in more detail, or maybe a different topic for a different video, let us know, and we would definitely be happy to try to cover it for you as best as we can.